Welcome to my channel. If you guys are tuning in for the first time, my name is Marsh Pillai. In this channel, I make videos about money, all things. So by the time this video airs, your boy is turning 30. Hey, to make it interesting, man, today we're going to talk about 10 things that you should have achieved or aim to achieve before turning 30. So number one is be financially independent. So what I mean by that is do not expect financial support from your parents, siblings, or any family members. So if you're living with them, now is a good time for you to move out, get your own place, get your own bills, and start paying them. And that's adulting 101. So number two on the list is to get your credit score up. So ideally it has to be 750 or above, but if you're starting at a lower point, at least try to get 720 and above, because having a high credit score will help you qualify for a home or auto loan at the best possible interest rate. Getting a low interest rate is very important so you don't waste money on high interest rate. You can save that money and put it somewhere else, like invest it and make more money off it. So work on getting your credit score up, ideally 750 or above, at the minimum 720. Number three on this list is to know your net worth. Reason behind that is what gets measured gets improved. So you guys have to strive to increase your net worth. In order for us to be able to do that, we have to measure. So it's a simple math, right? How to calculate net worth? It's going to be your assets minus liabilities equals net worth. So assets is going to be anything that you own that's worth something. So for example, house, car, your furnishments, anything, all those things that's worth something that you could sell and make money off, that's going to be considered your assets. And liabilities are something that you owe money towards. For example, if you owe money towards your house, that's going to be a liability. If you have an auto loan that you pay money for, that's going to be a liability. So assets minus liabilities equals your net worth. In our case, we calculate our net worth every year. So we measure it. So we track and improve. Number four on this list is to learn about investing. I say investing, it could be 401k, it could be real estate or stock market. Any type of investing that interests you, the more you learn, the better you become. And the better you become, the more money you can make off investing. So do not be afraid and start learning about investing. So number five on this list is to be able to save 25% of your monthly income. So whatever you bring in after your regular monthly expenses and leisure expenses, all those calculated and spent, you have to be able to save 25%. You have to be able to save 25% of what you brought in. And if you're not able to do that, then it's time for you to find more income streams like side hustles and things of that nature. But at the end of the day, you have to be able to save 25% of what you make. Number six on the list is to have an emergency fund of 3 to 6 months. So whatever your monthly burn rate is, whatever you spend every month times 6 is going to be your emergency fund. And this money have to be liquid. So it has to be in a bank account or something where you can withdraw if you need it. So if you put it in a real estate property or if you put it in a stock account and if the price is lower, you won't be able to get it out. So it's important for it to be liquid because as the name states, it's an emergency fund and you have to be able to take the money and use it for emergencies. So that's number six, have 3 to 6 months of emergency fund. Number seven on the list is to get rid of your BS debts. So what I mean by that is a house loan or a car loan is okay and acceptable as long as the interest rates are lower. For example, if your car loan is at 2% interest rate and instead of putting all the money in the loan, you're putting it in a stock market or real estate and making 10% of it, and you would net 8% positive, right? So if that's the case, then that's fine. But any other loan like credit card loans or payday loans or pool loans, blind loans, for everything these days there's a loan that's being given out, right? So anything, if you have like that, start paying them off and clear it as soon as possible. So number 8 on the list is to find what you love and build a career out of it. So in your 20s, it's okay to do what you have to do to pay your bills, but if you continue that in your 30s, then your life will become easily miserable and you might start hating your job. So it's important to find what you love and learn to make a career out of it. Because as they say, if you love what you do, it's not going to be like work. For example, in my case, I love numbers. So I am in finance and I love what I do, right? So when you love what you do, you can excel at it. So same for you guys, you have to find what you love and start making a career out of it. Number 9 on the list is to understand how taxes work and how you can minimize your taxes legally. In your 30s, you guys probably making more money than when you're in your 20s. And when you make more money, there's going to be more taxes. Very important to understand how taxes work and learn some tax saving strategies like 401k or real estate investments and things of that nature, so you can reduce your tax liability legally, so there's more money in your pocket and not the government's pocket. I have saved the best for the last, and number 10 is going to be willing to take risks. In your 20s and 30s, you guys should be able to take as much risk as possible within reason, because in your 40s and 50s, you won't be able to take too many risks, because if you take too many risks and if you fail, you're going to mess up your retirement plan. So in your early ages, you have to take more risk. The more the risks, the higher the rewards. Everybody knows that. So in my case, starting a YouTube channel is not something that I envisioned when I grew up or even when I was in college, right? But here I am taking that risk. If it fails, it's okay. You may take 10 risks that may fail, and the 11th risk that you take might succeed. You only need one thing to succeed for you to be financially well off. So never be afraid to take risk at your early ages. So we're going to recap what we learned today. Number 1, be financially independent. Number 2, get your credit score up, ideally 720 or above. Number 3, know your net worth and start calculating it every year. Number 4, learn about investing. Number 5, be able to save 25% of what you make. Number 6, have an emergency fund of 3 to 6 months of your monthly expenses. Number 7, get rid of bullshit debts. And number 8, plan to make what you love doing as your career. Number 9, understand taxes so you can learn how to pay less taxes legally. Number 10, be willing to take risks. So those are the 10 things that you should have achieved before turning 30 or aim to achieve in your 30s. So that wraps up today's video. I hope this video was educational and informative. So if you guys enjoyed the video, make sure you hit the like button, comment what you guys think. And with that said, I'm out and I'll see y'all on the next one.